Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, January 22nd, 2014. We had a pretty sharply bifurcated day where we had some pretty good strength in the NASDAQ side. NASDAQ was up 24.5 handles, but the broad market was pretty weak. The ES futures were up a little bit, but the Dow closed down 44 points. Internally the market was maybe just barely okay. We had advanced declines, positive on the New York side, and not that impressive on the NASDAQ side. We're only up 600 issues, and we're up 24 handles on the NQ futures. So to me, that's a little bit of a warning sign, and not a good internal showing for sure. Did have the VIX up 43 cents on the day, moving a little bit further away from that key 12 line. So let's move on and take a look at the price action, and then we'll look at the levels and some bar counts. All right, first up, here's a look at the NQ futures. The NQ futures were, as we talked about, up 24 on the day. You see we have some good space above the breakout from this rising wedge, and one key feature here technically is we did close in a new high in the move. So we got a new closing high in the move on the NQ futures, so that is definitely positive. Didn't put a lot of distance above the prior highs, but definitely something that the bulls can build on in the coming sessions. Here's a look at the S&P futures, still basically trapped in this lateral range. We were up on the day, but we did close below the day's open. And notice the last three sessions now we have closed below the open, which is not a great thing, but being that we're still contained within this lateral range, it's not really a huge warning sign, at least right now. If we start to gain ground on a net basis, and we're consistently closing below the open, that's going to be more negative. Right, here's a look at the Dow futures. The YM futures were definitely the weak link, or the weak leg of the tripod for sure. We are still contained within this lateral trading range, but we closed pretty weak on the day, and decently below the settlement on Friday. We closed just above Friday's low, which is a small positive for the bulls, but we could be seeing some signs of fatigue here, at least indicated by the YM futures. Let's flip over now and take a look at the absolute levels and bar counts. All right, so since we were just talking about the Dow side of the market, here's the YM futures. We touched that 8/8 level at 16,250, found support there, but we're still trapped in this trading range. We do have our 13 exhaustion in place, but the risk level has been broken. The big resistance right now is going to be the plus 1/8 level at 16,562. Then above that, the plus 2/8 level is going to be even more substantial resistance. So if we do break out of this trading range, just keep in mind that we're going to be contained by that 2/8 level initially, at least to the upside. All right, next up, take a look at the ES. The ES challenged the prior high, but was not able to really hold up. Key thing here is we did close above the day's open at range high, which is never positive. We are still above the 10 EMA and still kind of pinched here between the 10 EMA, which is going to be key support, and that 7/8 level on the Murray Math box. So key resistance is going to be the prior high, 1846. Support's going to be the day's low if we penetrate that 10 EMA, 1826.5, and then more substantial resistance, which probably is going to be fairly significant at 1812.50, because that is also this prior breakout here. Moving on to the NQ futures, which were the star of the day because they closed at a new high on the move. We pushed above the 6/8 level. Next level is going to be the 7/8 level, 36.72. To the downside, we're going to have support from the 10 EMA, which did not come into play on Tuesday. That's going to be about 35.74. We had a fairly high close in the trend today. We closed at 1.40. What that did was that nudged our 10-day trend up to 1.25. So we're actually really nowhere near overbought here. We're actually closer to oversold than overbought. If we get to 1.35, we're actually going to have an oversold reading. So there's plenty of room in the tank. If the markets do want to nudge to the upside, we can get all the way to the 0.85 level. To the downside in the market, we've got a little bit more room to go before we get that 1.35 level, but we're not going to have multiple days most likely of downside before we hit that key level. The S&P TLT cross is essentially leveled off here. We haven't really been able to get a new low close in below this swing low. We do have this little bit of a downtrend right now, which does imply that we're doing a little more risk off than risk on right now. But key thing here is if we do take out this previous swing low in the ratio chart, we're definitely going to be in a more pronounced downside risk off mentality for the market or an area. And let me just move this one. Let's move this down here. This is probably going to be the level to watch. We've got a couple touches here at this area. You can see we're working against this right now. So if we lose this area, we're definitely going to be switching things up here to the downside and taking risk off. All right, here's a look at the NDX S&P cross. This is starting to move in favor pretty decently of the NDX. So the NDX is definitely starting to assert itself here. You can see that we're breaking out above this trend line. I'm going to switch this over to the bigger time frame, the weekly. So you can see that we were in this channel here to the downside. We had this big crushing to the downside, and now we're starting to break out back to the top line here. If we continue to the upside here, we could definitely see some more positive movement to the upside. And if we can get up and challenge this prior high, that's going to be a pretty big deal here in the ratio chart. So definitely keep this on your radar, and keep an eye on this top. Here's a look at the multi-sector daily chart. Most of the individual sectors were fairly positive today. We saw a pretty good surge out of the BTK. That's the red line. Stocks were somewhat positive. The financials were positive, but didn't make a new high on the move. The one thing to keep in mind here, though, is that the XAU is starting to put on a pretty good show here. It's starting to move up to the upside fairly aggressively. Here's a look at the multi-sector daily chart. The multi-sector watch list ranked from best to worst. The BTK was at Top Gun. XAU was following, not all that far behind it, with a pretty good showing, being a relatively low beta index. The XAU is 6 days up in the countdown for the setup phase of the seeker, and is nowhere near an exhaustion warning. So we got plenty of room there to the upside. The utilities performed pretty well. The XOI was better than the broad market, that's for sure, especially with the Dow being down. OSX also was fairly decent. The big loser today was definitely the housing sector, and that's where we saw a fair amount of weakness today. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.